Hi, welcome to another episode of Global Real Estate Spotlight. In today's episode, we have a special guest, but we also have some very good data for you. And why is data important? Because we're speaking out to you, the investor. Did you know that foreign investors poured $56 billion into the US just buying homes last year? And Florida captured 21% of every single dollar. Mexico alone accounted for $4.4 billion in US purchases. And that's across the nation. Now, with all the hemispheric pressures south of the border that are accelerating capital flight, all that's coming into straight into Florida. If you're a realtor in Daytona Beach or Central Florida, this means surging buyers for you, which increases commissions. All cash deals and some of the highest commissions you have ever earned. Stay with me and let's unpack the data. Let's talk about what's driving this. As you can see on the screen, I mentioned $56 billion are coming into the US. Why is that and where is it coming from? Well, it's coming from investors from Mexico, from Colombia, from Brazil, and Argentina. They're facing economic pressures and also political pressures. So what is that doing? It provides instability for that country. And at the same token, investors and people that have the means will want to park their money in a secure spot. And how is that helpful? It's because as properties and as investors start investing in the US, they will not only want to deal with the investors and realtors that have the knowledge that can guide them to a great return. And as you can see when we were talking, and here in this current screen, you can see the influx and the countries that are bringing money into the US. Our job here as a real estate agent and as a consultant and all our network is to provide you valuable data on what you should be focusing on, not just what's in front of you or what's on the MLS. Now, what do international investors do when their local currency weakens and political risk rises? They move their wealth to a stable country. And like it or not, the US is still a gold standard in stability. That's why you still see new construction. That's why you still see a lot of influx of money coming into the US. And the income that comes into the US, it's creating not only assets, but it's creating fluidity into the economy. And that's why Florida is dramatically increasing not only its value, but its income levels for the local economy and for the investor abroad. Did you know that 45% of all Florida's international buyers come from Latin America and the Caribbean? That's 45%. Have you ever thought about that? How much money is being poured into Florida? It's not just US buyers. So if you're a real estate agent and you're not paying much attention to what's happening in the exterior, you should. Because what I can tell you, and from the data that we've extracted, there's income after income and purchase after purchase that if you're not paying attention to those numbers, and as you can see on the screen, Latin America keeps moving its income north. Why? And the factors that are on the screen are political instability, currency, the devaluation, plus they want the stability to park their money in a good situation. Now, recently, we've been talking to experts in their field, like we have as a special guest today with David Villar, and he's experiencing a different type of asset that can be of value to your client. Now, David is coming all the way from Orlando. And why is that important? It's because as we're speaking about capital moving north, David has a different perspective on how that capital can be allocated into buying a different type of investment asset. And why is this important? Because our channel talks about investments, and all our experts within the group have a different field of expertise. And that's where this becomes a pivotal point, because as the data that you were seeing on the screen from 2024, 2025, according to the National Association of Realtors, we're losing out on about $56 billion that are coming into the US. And if you focus and look at the numbers year after year, within the last couple of years, it's a 33% increase in property values and in capital coming into the US. So if you're a real estate agent in Florida and you're not paying attention to your surroundings, you should. That's why we have this show up for you. Did you know that the number of properties sold to international buyers was a total of 78,100 homes? That's up 44%, with the median purchase price of 494,000. That's a staggering number. And so now that we have David on board, he's going to bring you to open up that perspective into a different type of asset. And David, thank you for hopping on board and taking your valuable time coming onto the show. If you can tell us a little bit of what you have for us, and it's a different perspective. As I've been telling our audience, so much capital is moving into the Florida market that not many people are paying attention. And as I was showing on the slides, you can see that certain countries are beating some others, but it doesn't neglect the fact that we should pay attention to those countries in general. Don't you agree?
Definitely. Yeah, definitely. The market in Florida is is one of the markets that are being catered by other countries.
Yeah, definitely.
Investors to this. And thank you, by the way, for your invitation. I'm glad to be here. And since I'm going to be talking a little bit about Orlando, since it's my market, and Orlando is a fascinating market to analyze. It sits right in the middle of three major economic forces that is shaping the economy, actually, which is real estate, tourism, and global investments.
Wow. Now, can you enlighten us a little bit more on, when an investor buys into one of these projects, what project are we talking about? What exactly are they buying, and why do you recommend?
Well, if let's step back a little bit and let's look at the fundamentals that Orlando brings. Before, let me give you a little background why the project that I bring to the table is very convenient in this time and age, right? So when we step back and look at the fundamentals, Orlando is one of the strongest hospitality markets in the world. Right? And I'm not saying that just because I like Orlando. No, we've seen years after years that Orlando has received between 70 to 75 million visitors per year, making it one of the most visited destinations in the country. As we know, Orlando is has a large entertainment ecosystem. Theme parks, conventions, cultural entertainment, international travel, medical travel, fine dining. Just in case you didn't know, Orlando has 9 restaurants with Michelin stars. Hey,
but wow. Going back to 9, huh? That's a lot.
That's a lot for a city that's growing as fast as it's growing as Orlando is. So we're talking also about lifestyle, right? So to be clear, the real analysis is not just real estate, but the whole infrastructure behind it. Basically, entertainment and the lifestyle ecosystem. And when you see billions of dollars pouring into developing projects like the Epic Universe from Universal, this is a $7 billion project. This reinforces the long-term demand, for this market. So if you ask me, what does that mean for investors? Well, it means that Orlando has and will likely continue to have the consistent, demand for short-term accommodation. So
right,
yeah.
In question, because you mentioned 70 to 75 million visitors per year.
Yeah.
Did I hear you right?
Exactly. Yeah, that's more than 50% of the visitors that come to the whole state of Orlando.
Wow, that's a staggering number, and it goes back to reflect what I was saying. Where's the money coming from? So and I'll let you expand a little bit more on this project, but it seems in my head that some people come visit, they fall in love with the cities or cities, and then they start doing their hunting. Is that kind of what you're seeing?
Yeah, Orlando has a different kind of real estate, and the one I'm referring to is the hospitality real estate. And
Got it.
if you ask me the difference between traditional rental and the hospitality real estate, I will tell you that. Well, first of all, the revenue model is different. That's what the
Got
big
it.
difference is. You know,
Hmm.
so
Can
traditional residential investment is long-term leases, and they are more
Okay.
into the monthly, rent. In the other
Right.
hand, hospitality real estate captures tourism demand through short-term rentals
Mm,
operating more like a hotel. So that's what
I
I'm with.
see. I
So.
see. So yeah, I had and I apologize for that. My concept was completely different. I'm
Mhm.
glad that you're explaining it, and hopefully the people in the audience can understand the difference. So that's great.
Right. So instead of analyzing, monthly rate from the regular residential rentals, investors like prefer analyzing metrics like occupancy, nightly rates, operational efficiency. You know,
Mm,
and because of that, these investments rely heavily on the professional management operations and the hospitality distribution system. uh, that's why understanding the management structure is critical in these types of investments.
I can see why, because it gets confusing. And just for my knowledge, and we have a couple questions. What's the difference between what terms that people hear between a condo hotel, a hotel residence, and some people assume it's a timeshare or it's a fractional product. They're all different, but when an
Yeah,
investor buys
definitely.
into one of these projects,
Yeah,
can
they're
you
all different
expand?
because a condo residential is more like I mean, what we are doing is gear everything towards hospitality. It works in a hospitality environment. So the hotel residence in itself is a is basically you are you're purchasing a hotel room that is being rented by the operational, the institution, the operating, the developers and the operators. So
The
that's basically
operator.
what it is.
Okay.
Yes. Hmm.
So then somebody in the project that you're speaking about, somebody's in charge and responsible for the continuous rental. Is that correct?
Yes. Yes. That's totally correct. Yeah.
And what exactly are the clients buying? When an investor buys into one of these projects, what are they buying?
Well, in most of the hotel residence projects, the ownership is fully deeded. For one thing, you were talking about, fractional ownership or timeshare. This has nothing to do with it. This is fully deeded ownership, and it's fully furnished, similar to a condominium. But it's designed to, like you were saying, but it's designed to function as within the hospitality environment. Owners
I
can
see.
typically use the property for a limited time, right? And when they're not using it, it goes into a rental program. And this is the
Mm.
part where professional management operations are critical. The rental program will handle booking, guest services, housekeeping, the day-to-day hospitality functions, among other responsibilities.
That's a huge relief, especially for foreign investors that don't want the daily grind of the maintenance and who do I call? And
Yeah, you
if
don't have to
somebody's going
deal
to
with
handle
that.
that,
And that's the advantage of not buying an Airbnb, let's say, because there's a lot of responsibility behind the Airbnb. This is all subject to the structure that it has, the operation management.
I see. Which raises a question because hospitality assets are a combination of real estate, tourism demand, and operations. Evaluating those kind of units requires a slightly different operation and evaluation than a traditional analysis. Can you talk about a framework how investors can use to analyze hospitality real estate?
Yeah, sure, sure. There's a framework that analyzes hospitality real estate, and initially it relies in three variables with on three variables, and I like to call it the hospitality investing triangle. This is how initially hotel, hospital, and hospitality assets are evaluated. All right. First of all, we have demand. Yeah, is the location supported by strong tourism and travel activity. That means
Okay.
looking at tourism numbers, the infrastructure, airport traffic, major attractions, and overall visitation trends. Second, we have the performance. Performance is very important. At this point, we are looking at the operators itself. So what we have to keep in mind is how effectively the property converts that demand into revenue. Here we like to measure metrics like occupancy, average daily rates, revenue per available room. And finally, which is this is very important as well, is the fee structure. How revenue is distributed between the brand, the operator, and the owners. When those three elements align, strong demand, solid operational performance, and a reasonable fee structure, hospitality real estate becomes a very compelling investment. And that's the reason why I suggest all the time to analyze the entire model, not just the revenue projections.
And that makes a lot of sense, but it's a lot for somebody, even me, to take in. That's why we have experts like yourself that can guide people in the right direction, and I'm glad that you're the expert in that situation. Now, theory is helpful, but investors usually want to know how to actually apply these ideas when looking into a deal. This is where the triangle becomes practical, right? This is where the
Right.
triangle you're showing us. Can you give me an example of how investors might apply this framework in the real world?
Yeah, definitely. I'll give you an example. Let's say Amber Residence, Orlando, located in the Disney corridor, right? It's an interesting pre-construction project, and a lot of investors are very are looking into it. That's a lot about it, right? So what it is, what makes it interesting is that it is not about the building or buildings themselves. It's about the structure behind it, right? So just to give you a little background, the property operates within the Marriott Bonvoy ecosystem. That's very
Hmm.
important. Now you know that the operator is somebody reputable, right? Some great institution, and which adds, and this adds great hospitality standards, global distribution, and global exposure. So investors evaluating this project should ask questions like, what is the demand? Well, we already talked about Orlando's 75 million visitors per year, telling us that travelers are actually coming to Orlando. Another question could be, how will booking be generated? But the real question here is how effectively the property converts that demand into revenue, or how well is it performing. Here, the investor would look at comparable hotels in the area, evaluate key metrics and the company behind it, which is in this case Marriott. And the last question could be, how does the revenue flow between the operator and the owner? Here is a question that will help investors understand the fee structure. Here, investors examine how rental program works, that rental program that we talked about earlier, how it
Hmm.
works, what percentage goes to the operator, what fees are deducted. That has to be very important because you're not going to get everything. You have to always think of the deductions because you are paying for that service as well, and you have to be realistic, and you have to look at the potential payout also of the owner.
Wow.
So all that adds up to an estimate number, and you get to clarify, and it's very clean because at that point you know what you're getting. There's no surprises at that point. So there's these are the kind of questions that helps investors understand how the model works.
No, and it's a lot of questions because you're the expert and you know your material, and I've been in this space for quite a while. but I still have questions, and I'm sure some people in the audience have questions.
No,
Um,
definitely.
and I'm wondering what makes this asset class interesting is that investors are not just looking at monthly income, they're actually looking at a potential financial moments that they can kind of play around with to increase their profits. Is that how I'm understanding?
Yeah, yeah, that's a good question. I mean, there is
What
a
do you, what do you mean by that? And sorry to cut you off, but
yeah.
it seems like there's two profit events.
Yes, actually there is. That concept is often used to when analyzing a pre-construction project. Um, the first potential profit event occurs during the development phase. Investors who buy early in pre-construction sometimes benefit from the price increase as the project progresses and the demand grows. Generally, the initial offer has an estimated discount of 15 to 30% below market value. And I mean,
Wow.
you could start investing, and you know that in 6 months your money has increased by 30% max. You know, so the
Wow,
second
that's
profit,
crazy.
yeah, it is an advantage to get there first, definitely. The second profit event begins once the property is completed and operating. So
I see.
at that point, the residents can generate that cash flow that they're looking for, the monthly, through the rental program, and that
Okay.
understanding these two phases helps investors evaluate both the development side and the operational side of the investment.
I see. And when people look at projects near the Disney corridor like Ambar, you start to see how location, tourism, and operational structure intersect. And it looks like we have this a beautiful project.
Yeah, it is.
So,
It is.
in is this a rendering of what it's going to look like, or a hypothetical?
Yeah, it is a rendering, and it's 15 minutes from Disney and all the entertainment, maybe 20 minutes from Universal. But this is a rendering, and they already have broken ground. So those that want to get in early, they should start doing it right now because they already broke ground. So
Oh
as you can
wow,
see, it's gonna go through three phases because we got three buildings
mhm.
there. So
Got it.
and it's running fast too. So.
And let me ask you, David, like a project like Ambar, what should they really focus on when they're evaluating a project of such magnitude?
Well, usually I tell investors to focus in three pillars, right? First, we have to go back to the market fundamentals. We have to make sure that the location supports the long-term tourism demand, which in this case, we're talking about Orlando, and we have projected, and it has a long term. Orlando has a long term for tourism demand. Second of all,
Mhm.
we have operational structure, who is managing the property and how booking is generated. So we know that is in this case is Marriott. They have reputation throughout years, trial and error, and at this point they're one of the top in the industry. And finally,
Mhm.
we have the financial model. Yeah, it is important to understand the revenue distribution, the operating costs, and to have a realistic income expectations too. And that I could help you with all of that. These three elements can make hospitality real estate a very interesting and profitable investment.
That sounds like a mouthful, but I'm definitely interested because not every investor is as savvy as you are. But just wondering if investors are interested in these type of investments, for lack of a better term,
Uh-huh.
usually what kind of investor gravitates towards the hospitality side into real estate like this?
Well, we often see international investors looking for diversification of their assets, right? They want to be exposed to the U.S. real estate market. They want to be exposed to the attractive hospitality market supported by millions of visitors. We are in Orlando, right? And also assets denominated in U.S. dollars. And one more thing that that is very interesting. We United States enjoys the benefit of judicial stability. Not many countries do. And many international investors gravitates towards that, especially during election seasons. Many so
Wow.
whoever's term in that administration is, they might change the rules, and you never know. So that security that we have with that judicial stability, that helps them to assure that their patrimony is where they want it to be. So that's the kind of
That's
that's the type of assets that that this is a kind of strategy fit for those kind of investors.
That's very interesting, David, and thank you for sharing that. And it kind of goes into what I started talking about, that there's so much money coming into the Florida real estate market that people are not really paying attention to unless you're looking at the data. And it looks like in your office, you guys are looking at the data
Yeah.
and you're analyzing every deal so that you can consult your client a bit better. Is that what you guys do?
Yeah, definitely. We will give you the whole. We explain. We start from the beginning to not make it too overwhelming, and then we will start, feeding them more information. And as time goes, I mean, we have help from financiers. I'm not a financier, so I need to, to consult with them. And we help them also to create an LLC in case they don't have one, because that's the way you purchase a property if you're a foreign investor. So
Well,
yeah, we have
that's
a whole team.
and I'm glad you do, because it
Mhm.
gets complicated, and that's a beautiful project there, David. Um, Before we let you go, is there something that you think would be of value to the client or to the potential viewer that's considering something like this?
Yeah, for those investors that are looking or just curious, I would like to emphasize that when evaluating hospitality real estate, to keep in mind that you're not just buying a property, you're investing in the ecosystem that's around that tourism demand. So yeah, basically that. Don't focus
No,
only on the numbers. There's an ecosystem that tourism is necessary for tourism to work. It doesn't work alone.
it's very interesting, and not many people focus or dedicate their time to learn about the hospitality
Mhm.
side of real estate, which is very. And Marriott, you mentioned, they're a global company, so it gives a stability for that end user. Is
Right.
that how you guys are projecting it?
Yes, definitely. Yep.
That's awesome, and thank you for being on the show. I think you opened the minds of many investors that are out there. It
Mhm.
gives them a different perspective. It's not just to buy a house, fix it up, put some lipstick on it, and then resell it. The real
Yeah.
estate encompasses a lot of different avenues, and that's how we take pride. In this podcast, we try to bring you different types of real estate, but at the same time, within SB Group is where David is at.
Mm.
They get to learn the different aspects of real estate. And so, thank you for being on the show, David.
Thank
Um,
you.
and I hope this was useful for you, because now knowing the numbers of how many billions of dollars are coming into the US
Mm.
and into Florida, it should open the perspective that real estate agents now or in the future should be paying attention to Latin America, just like we are. Don't you
Yeah.
agree?
No, no, definitely. Latin America is one of the main investor pool that we have in Florida, and that's a good thing because I mean, we are open to everybody, obviously, right? But
Right.
Latin America is like a blue sea. Is something we need to start exploring, be more open about it. So yeah.
Exactly.
Yep. So hopefully
And
I managed to create a little curiosity to the point of you could give me a call, we could talk, and I could expose, because this is one project, and Orlando is full of projects. And like I said, it's full of projects because there's demand. I mean, there's 7 billion dollar projects that are being produced right now. So I mean, there is demand for the future. So there's more projects there that if you want, I could help anybody with those.
and that's terrific news. And the for those new investors or savvy investors, what they all want is to park their money in a place that's safe, that's going to keep growing, and has a potential for future growth. And that's what David has showed us here. I was trying to show you guys the numbers and the magnitude, why you should pay attention to the investor side of things and to pay attention to Latin America, because it's an eye-opening experience once you start seeing the data. We welcome you to another show in the future. We're going to be bringing you every week different material. But thank you for being on the show once again, David. Thank you for your expertise.
Thank you.
And
Thank
we
you so
hope
much.
to have you on board sometime soon.
No, definitely. I really appreciate you bringing me on board, and I'll be back whenever you want me back.
Sure. Get your bags ready.
All right. Thank you.
Sounds good. Thank you, guys. Thank you for another great episode, and we'll see you on the next one.
Thank you.